What's going on? It's your boy, Levon Stewart, founder, CEO of On the Effects, and welcome back to another episode of Take Profit Tuesdays. Now, as each and every single video that we love to do, here is a disclaimer. If you are not involved in the financial markets, if you're not experienced in the financial markets, if you are not um willing to lose all your money in the markets, if you are not has psychology for the markets, please seek an advisor. Please seek someone who is registered, has their series 669, all these different series. Generally, advisor is going to work for a brokerage firm, which is regulated by the FIRNA, SEC, and other agencies. So yeah, those are going to be the guys you're going to go to. Where you come here now, you get the education, edutainment of how to increase, become profitable with your account trading long term and maybe even short term. But we teach the fundamentals, we do the basics. Nothing too extreme. Nothing too extreme, but maybe some videos for down the road. We'll see. But anyways, we as a company we offer three businesses and services such as alert room, crypto management, and one-on-one training. So if those are things you're interested or want to learn more about it, you can shoot me a message and we can set something up, right? So now, I wanna really focus on this video, and it kind of takes me back to the one of the first times I've ever traded. One of the first when I first got into the markets. I would say probably around 2019. Um, and I'll be honest with you, it was really confusing. Yes, I've seen charts, different kinds of charts, but I didn't know that each chart, each candle, each time frame, it tells a story. And some of you may actually, oh Lee, what are you talking about? It tells a story. It's just candlesticks. You just see red and blue and green and zigzags and butterflies and cartoons. And I said to them that, all right, you got a point there, but did you know why it dropped that much? Did you know why it jumped that much? Did you know that this event caused that to happen? Did you know that this was going to be anticipated to happen and it happened? It just opens the doors for so much opportunity, right? So when you really think about things in the time frame wise now, with the videos that we do weekly, we do things on the daily time frame, right? So each candle, I zoomed in a little bit closer so you guys can see it better. Each candle represents a day of trading. A day of trading. So, 1 second, guys. Yes! Jeez. Sorry about that. Just got distracted. So each candle represents a day of trading. Now you're looking at S&P, so you have to understand the how what the hours of operations for that market. If you're in the Eastern Standard Time, that's going to be from 9:30 to 4 p.m. Right? So this is relatively each candle is almost 8 hours of trading, relatively speaking, right? Or workday of trading, or whatever the case may be. Now, if you're going to other markets, like let's say for instance crypto, or let's say for instance forex, or um even like the Japanese index or the Euro stock exchange, those are open up in different time frames as well. If you're involved in those things, the crypto is 24 hours. Forex is generally 5 days a week, closed on the weekends. But yeah, so now think of it like this. If you watch my videos each and every single week, right, you may not notice the significant changes of each and every single week. unless you watch it like a month apart, or even like every other week apart. Then you can see, oh, that was a big dip. Oh, that was a big move. But in reality, it moved slower for me because, again, I tend to be looking this at it daily, once a day for like 2-3 minutes. I'm like, okay, cool, nothing crazy happened. All right, see you tomorrow. It's as simple as that. I don't. It hit let's say 2 weeks ago, it hit the trend line. I'm gonna have shorts already lined up just in case, or buy positions at the bottom just in case it may pop up. But nonetheless, guys, it's very important to really, and this really goes out for my swing traders. So me, I consider myself a position investor, and maybe a swing trader at times, right? So me now, as an investor, I'm almost always gonna look at the daily. I'm gonna look at the weekly, and I have to look at the monthly. Um, and the reason why, guys, and which I could definitely tell you more in details if we do the 101, is that these time frames have heavy influence on price action. Take notes. Time frames have heavy influence of price action. What is price action, you might say? Price action is the movement of how price goes up and down, which can also be predictable at times and mean at other times, right? For instance, right? You see, and I think, yeah, we did a video about trend lines. I might do another one just to emphasize on certain points. Probably do a high time frame, short, small time frames, so you guys learn a little better. But anyways, just like this downward trend came up very top, all time high, dropped down, took a dip, retested, came back down. Weeks later, came back up around that zone. So that's when we created a trend line, right? And then 3 or 4 weeks ago, we saw price explode. And I told you, hence why I still have those arrows still because I forgot to take them down. That price could go either one or two ways. Because we saw it was going sideways. So I was like, okay, something's going to happen. Something has to happen. Price just never stays at the same price for too long. Buyers are going to jump in or sellers going to put in. Right? So that's what happened. So ultimately what happened was, based off the technical analysis and what have you, the seller stepped in and continued that downward trend. It hasn't fully completed to make a lower low. And I really hate the highs because, to be honest, I'm looking at it different from everyone else. Imagine where someone sees the market. Oh, the stock market just went up 5% yesterday, and today went up another 5%, and then the day after that went up another 5%, and the other person was like, damn, I missed out 3 days of profitable trading. I could have made some easy money, passive money. And what the not so intelligent person does is that they step into positions, just like I just mentioned, after the fact, when they should have, instead of put in, but put away to save for a better opportunity. Because again, if you're profiting on day 3 of the past 3 days of profitable market conditions, there's going to be a sell-off. And of course, we'll talk about it in the later videos, but back to what we're talking about as far as the time frame now, weekly now. If you really want to take it to the, really consistent future planning, maybe you're the kind of person who look at the markets like once a year. And be very, very careful when I say this. The only time you use this time frame is when you see significant sell and buy zones, right? So we're looking for zones where, for instance, if I could pull it up, 1 second, guys, 1 second. It's really interesting. So this part. And then you could say even someone around right here. It's how this supply zone hasn't fully formed, but hey, it's kind of reacting off of these points off the weeklies, because this is a small time. But anyways, as you guys can see, right, just based off this one right here, price came down, sold off. This was back in, oh, this was COVID. Yeah. This during COVID, the market tanked. You know what was expected? It rallied back up, made all-time highs, and then from that point where it tipped, it kind of jumped on that tip and then made higher highs to where we are today, right? And then obviously a recession and inflation and all that fun stuff. But anyways, I still have to say is that there's a lot of opportunities to make money long term, right? Because you mean to tell me we're currently now in a buy zone and you have not jumped into a position yet? You have not at least put, let's say you're a millionaire, right? You didn't put at least 50K in the S&P and let it residually grow, earn a couple thousand every other week, right? So now I want to look a little bit on smaller time frames, and this is just time frames I almost never look at, or not. So I'm lying, not almost never look at, but I really, 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 I may look at them for entries, like best time to get in, but I'm not trading these at like these time frames at all. It's just too much going on. It's too much history looking at, too much data, and again the influences. If you're not careful, the higher time frames will take you out, right? Because there's a lot of points where these huge buyers and sellers coming in and out the market, right? You see a little blip right here, that huge buy, and then a sell